Good morning, everyone, and welcome to this live trading webinar. How are you guys doing today? Anil, thank you so much for your comments. I read them. Anil asked if we can stick only with a couple of currency pairs, a couple of instruments, and just go through analysis with moving averages, stochastic RSI, and harmonic patterns, and everything. The thing with that is, guys, when we decided, we decided that we develop a type of analysis with high probability. We cannot force the market. I'm not saying I don't like this approach, but I'm saying that we cannot force the market to do what we want it to do. When it comes down to the higher time frames and we trade purely price action setups, it's totally different mindset we need to acquire when we go down to the 1 minute chart and 5 minute chart and try to trade some breakouts, do some scalping. So it's a completely different shift of mindset and attitude, the mentality towards the market information. So we must stick to a process and not vigorously just have, let's say, we are watching only 3 or 2 instruments and that's all, and we try to find setups. Okay, maybe this work for many traders, or some traders, but for myself, based on my experience in trading experience, solely trading experience, for consistency and profitability, I found it that sticking to a specific way of trading rather than trying to understand and going through whatever the market is showing us, because there are times markets, they show uncertainty. All right, so here I try to give you the way to have the highest probability setups that will help you with your trading. So let's get started. Good morning, Mladen. Good morning, Larry. Guys, let's make sure again that you understand and everyone understand that this content is for general information only and is not intended to provide any trading or any business recommendation or any kind of personal recommendation. Good morning, Cherry. And every trades I initiate on this live webinar, it's based on my thinking and my process when I trade, and it doesn't mean that everyone has to copy it or has to follow it. All right, if you think it's not appropriate for you, please make sure you listen to your weekly fundamental analysis on the podcast. And also, if you haven't downloaded the application, our Admiral application, please make sure you do so. Before we go to the charts, I would like to take few moments and just go through the premium analytic portal and the calendar. So for today's top headlines: White House debt ceiling meeting failed to yield breakthrough as deadline nears. Fed's John Williams doesn't say whether more rate rises will be needed. Okay. EIA forecast second highest US summer power demand on record for natural gas. Boeing wins 737 MAX jet order worth up to $40 billion from Ryanair. Turkey's top election challenger pledged closer ties to NATO and European Union. And the last one, Airbnb shares fall as company issues mixed outlook. Now, if you are trading shares or if you are building a portfolio with shares, we take advantages when the price of the share drops, so it's good for buyers. Okay. Now, let's check the Forex calendar. Let's just throw some filters very quick. Here, I like to select all majors and I keep only the high impact news. Today's Wednesday inflation rate in the US is expected to drop by 0.1%. So maybe we identified some weakness on the US dollar based on this one. And tomorrow, Thursday, we're going to be here. We're going to talk about the interest rates decision in the UK. A 25 basic point raise is expected to happen. Therefore, we can see some bullishness in the Great British Pound. For Friday, we're going to talk on the day. Rumen, good morning. Palmier, good morning. Let's go to the MetaTrader platform. So, what's going on with the pound and the US dollar? As we can see on the screen, here is the daily chart. Great British Pound against the US dollar. The market showed this ascending triangle formation, break to the upside. What I like with this formation is that the sellers, they appear with this reversal shooting star candle line, but immediately the session after, so because this is a daily chart, it means yesterday the buyers, they stepped in right at this point and they rescued the market. So it looks like more bullishness can occur. Be mindful, traders, that the reason I have the 9-day moving average and the 21-day moving average is to see how deep the... Okay, don't get me wrong. Of course, when the 9 is above the 21 moving average, it signals bullishness in the market. But for me, it's very important to see the corrections, the retracements. Once the retracement occur and a bullish reversal in this occasion occurs just above the 9 moving average, that's a signal of a shallow retracement that indicates a strong bullish bias in the market, a strong momentum. So if I was trading on the intraday charts, let's say on the 5 minutes or 15 minutes or even 1 minute chart, I will be looking to find, let me take you down to the 5-minute chart. I will be looking to find structure that shows higher high and higher low. I will therefore draw a trend line if I could. And I will also use the FIB tool from the low to the high when we identify the reversal. And I will be waiting somewhere in the area of the previous swing high and the 50% or 61.8% FIB retracement to enter long. That's how I will about to play this scenario. And that's really my strategy to attack trending markets. Okay. Regardless time frame, that's what I do when I trade trending markets. You can do this on the 1 minute chart, on the 15-minute chart, on the 5-minute chart, everywhere. But you must have the exact setup. You need a higher than a previous high and a higher than a higher low than a previous low. So again, first thing we want to see, it's higher highs and higher lows. Second thing we want to see, it's trend line up, trend line, not just a trend line. Okay, also this is a trend line. We need an up trend line. And the third thing we need to see is a reversal, so we can, a reversal candlestick, so we can take our FIB tool, start from the bottom to the top, and mark the 50% retracement and the 61.8% retracement. And the fourth, we wait like a sniper. We become snipers. We wait for the price to come to our levels. We don't react in the market. We don't react in the information. Guys, did anyone watched my webinar yesterday about the trading psychology? I explained very well how to understand when we act to the price move and when we react based on the up and down ticks in the market. Okay, if you haven't watched it, please make sure the team, I think today they will upload it on the YouTube channel, so please make the effort and watch it. Now, I got stopped out on the euro against the US dollar. I had a buy stop order that it got triggered to get filled with a possible breakout of this ascending triangle formation, but it didn't work out. My stop loss was here. I got stopped out. The entry was there. That's fine. No problem about that. It's probability trading, right? So it appears to be a bit weak, the euro, comparing to the US dollar based on this formation. After the market broke outside, but to the down of this ascending triangle, and it shows that the pattern failed, it leaves us with a question mark. What are we going to see now? Are we going to see a new high from this point? Are we going to see the market comes here and reverse at this trend line and then it's continue to falling? Or are we going to see continuation to the downside? Because we don't know. We don't have any information about this market structure right now that can base a strategy and can execute a high probability trade. It's recommended to stay on the sideline. That's how I go through the markets on a single day basis. I see, do I identify any structure that I know and I trade it and I have a strategy how to trade? If not, then I just stay on the sideline. And I will let you know that this is something happen every day. Most of the currency pairs, they don't have clarity. We cannot force. And guys, please pay attention to this. There are many, many occasions because we start from the major currency pairs to do our analysis. We start with the pound, euro, Australian dollar, Kiwi against the US dollar, and then we have the dollar, US dollar against the Swiss franc, US dollar against the Japanese yen, and US dollar against the Canadian dollar. So because we start with analyzing these markets, if we don't understand what these markets are showing us, what these markets are doing based on the charts, then sometimes it becomes very stressful for the trader to keep analyzing the market. Trader thinks that, okay, the majors, they don't show any sign of trend identification or any range identification, so we can trade. So I have to force a trading strategy that I never tried, that I never execute into these market conditions. By the time that really I don't understand what's going on. So you have to understand that, guys, the markets are moving in a million different ways that we cannot explain them, and it's okay. We only focus on specific market conditions that we do understand, and we have a solid trading plan to execute them. Okay. Let's move on. Australian dollar, US dollar, stuck in this range. That's the top, that's the bottom. The market put an inside candle yesterday. Now, if it's going to push lower, if it's going to break to the upside, of course, Based on this one, someone will arguably saying that I prefer to sell. Okay, we prefer to sell, but up to what extent? Now, are we going to sell all the way to target this area here? We don't have any bearish divergences. Price makes higher high. Sorry, the indicator makes higher high. The price make equal high. I prefer just to stay out of this one. I don't understand what happened, so why to force it? Now, yesterday I got triggered into this Kiwi US dollar, so I'm still in the trade as bullish. Gradually, the US dollar against the Japanese yen is trying to move higher and higher and higher. But guys, we see very, very small bodies developing here. So maybe that's a sign of weakness from the buyers. They are just trying to bring the price as high as possible to start selling from that point. We don't know accurately what the intentions are. Anil asked, Aviator, good morning. Anil asked, question for you, Theo. Are there some currency pairs that tend to be mostly sideways? I would say the best way to answer your question, Anil, is we go through the currency pairs, the major currency pairs, and if we see that the pound, like the pound here, for example, is strong, but also we identify strength in the Kiwi against the dollar. So if you take the US dollar out of the equation and you keep only the pound and the Kiwi and you put them together, most likely you're going to have some sideways move. This is the pound Kiwi, and it's just to show you, yesterday the pound Kiwi just traded within this range. All right, I will go to that pair because there is a nice setup that I like to trade, so I will place the pending order. Now, US dollar against the Canadian dollar, I had a limit order here. It got filled yesterday, so I'm in this trade. My stop loss is below this low point, and I'm waiting for the market to push higher. Euro, Japanese yen, I really don't trust this market. It retraced very deep. So it's not something I'm interested to look for the long side. I'm going to look for the long side if we're going to put a higher than this high here. If we're going to go higher than this high, then I will be looking to trade long. Pound, yen, pound very strong. So the yen appears with some kind of weakness. So maybe we're going to see some push to the upside. So euro yen, pound yen, really for intraday trades. If we go to the 5-minute chart, we see nice trend development. So we can use trending strategy and we can buy. Australian dollar, Japanese yen, I don't like the price being in this area of resistance trend line of just came from a horizontal resistance. New Zealand as well, a strong currency. So against the Japanese yen, it shows some strength. We have a higher high in price. Why not to look for longs? That's the one. And that's what I really like on the lower time frame, on the 5-minute chart. On the 5-minute chart, we have this deep retracement, and that's okay. When we see the price come and take the high, we will be interested to buy this market. CHF against the Japanese yen. I have a buy. I was bullish. If you see, remember, I had a buy limit order at this point here because we have a higher high. The price came and retest the 21-day moving average. It's still on a higher high. The market was trading at this area here, but I told you I want to have a limit order at this point because I think it's too high to buy that at the time. Market yesterday filled me in, bounced off from this area of support, and hopefully it's gonna reach my target at this area. So my stop loss is below here. CAD JPY, there are much clear pairs against the JPY rather than the Canadian dollar. Australian dollar and euro, or if you prefer euro against the Australian dollar. I had a buy limit order at this point here and I didn't get filled on this one. Look at this, guys. Look at this. It was during the it was during the Australian or Tokyo session. See, the market came all the way here for 1.2 pips. I didn't got filled in the move. I will be with 35 pips profit so far, but I didn't got filled. But that's okay. What to do? If the market is going to make a higher high here, I will be looking to delete the order. At this time, before I will come back to the pound because pound is strong, but I will really want to get ready for to see if we have some gold trading to do today. WTI, nothing. On the Kuber, I'm holding a trade, as you can see here, from this bottom, double bottom here, another bounce. So it looks like the market doesn't have that momentum we would like to see for a push to the upside, but that's okay. Bitcoin, inside candle there, most likely is expected to break to the downside. There is a similar, like the Bitcoin here, guys, there is a very similar pattern on the pound New Zealand that I would like to place a pending order today. Let's go to the DAX and have a look. Yesterday, as you can see on the DAX, we had this minor move to the downside, very small body. Buyers, they stepped in somewhere in the middle of this bullish candle and they pushed higher. On the 1 hour chart, we have this resistance. Now on the 5-minute chart that I would like to trade today, let's zoom out a little bit. Really, the only thing is here is if the price break above this area of resistance, it's a totally breakout strategy. That's I really don't like to trade above strong resistance to be a buyer. Prefer to sell on the strong resistance. But you know what? Strategy is a strategy. The market can do its thing. The next area of resistance is up here. That leaves us with a clear 14 points. If we're going to break Theo, Ruben said, Theo, the arrow of your pointer is often black on the black screen. Okay, guys, maybe I will change the screen to white background if that works best for you. I don't know where I will try to do the settings. Okay, I will try to use the pen to show you on the chart then. So we are at this area here, and the expectancy is to see a break above based on the strategy. So let's go to the 1 minute chart. But I will flip to the 1 minute chart. I don't want to place a buy stop and trade. And Echo Mama said white screen. Okay, I don't like to place a buy stop order above the resistance, because really on the resistance usually there is an accumulation of sell limit orders. Therefore, I will stick only to a sell stop order. Now that's the 1 minute chart. I will have a sell stop order below this low point and a stop loss to be above this high point. So repeat again, stop loss to be above this high point and entry to be on the break of this low point. If the market feels mean, that will be great. Now, we have 2 minutes prior the market open. So that's my setup for today. If we check the gold 5 minutes, if we try to scalp on the gold as well, I will place a sell stop order below here and a buy stop above here for the gold. Okay, so today I will do 2 trades, the one on the DAX, sell stop here on the DAX, and the other one on the gold, buy stop and sell stop. Whichever it's going to get filled, I will cancel the other. The market open, I'm expecting to see what's going to happen with these 2 trades today, gold and DAX. Okay, it breaks to the upside. We will see if it's going to end up being a valid breakout. If you guys already placed a buy limit, a buy stop order here, the market gave 5 points so far. Usually I go for minimum 10 points. Okay. That could be a good trade. Anyway, I didn't participate in this move to the upside. Gold still moving sideways. Let's see if we're going to have a Henry asked why buy stop and sell stop for gold at the same time, because I want to scalp for few pips on the breakout of the market, either to the upside or to the downside. Now, if the market is going to take this order here and it's going to get filled to the downside, I would expect some aggressive selling, at least for 5 to 10 pips, and I will just close the trade. Okay, we got filled here, so I will cancel the buy stop order. So the stop loss for the gold, it's above this high point. We are short on the gold. The market is 4 pips so far to the downside. Let's check the DAX. Okay, so DAX skyrocket to the upside, guys. I will delete the sell stop order. So I don't know if did anyone bought the DAX? So the only trade I'm in is the gold, and I will be looking to target somehow 10 pips. So by the time the price I suppose to come to the 2030, I will be looking to close the trade if it's going to come, and that's my trade for today. So let me show you the pound kiwi. Pound kiwi, it has a very interesting structure. The market broke below this trend line. As you can see, there is an uptrend line, very, very strong trend line, and the market broke to the downside. So what I like at this point, usually during continuation patterns, the market put this inside reverse hammer, okay? And if we're gonna see a break to the downside, usually it ends up being an aggressive break to the downside. What I will do, I will place a sell stop order below the low point, and I will put a target above this high. Sorry, a stop loss above this high. And a take profit, I'll show you exactly. It's going to be about 221. So my stop loss, it's going to be above this high. Come on. Yes. And the take profit, it's going to be just above this low point here. That's a more than 2-to-1 trade. Okay. Because that's the next support in the market. Here is the next support. So if I'm going to get filled in, I will be happy to stay until the market tests this support here. Let's check the DAX. All right, so DAX is retracing back to this area of support. So that's good. WTI though, nothing. Pound Swiss, it's nothing here on the daily chart. Very confused. Pound Australian dollar. We are at this area of support, this inside candle here. I will tend to have a buy stop order with a stop loss below this one, but I'm not going to do it because I'm exposed in many currency pairs and on the pound as well. So I prefer just to have one trade. Similar, the pound Aussie and the pound CAD, they have very similar pattern. Pretty much that's it. So take profit, Rumen, FTSE, great, well done, nice call. Anil said, put the white outline on the candles, Theo. Okay. Princess, hi, Theo. I just want to know, how do I copy your trade? There is nothing like a copy trading on this live webinar. I just show you where I enter, where I put stop losses, and where I put take profits. And if you want, you can do the same. Just before we wrap up, if you didn't see the pound New Zealand, sorry, yeah, the pound New Zealand pair, I have a sell stop below the low of this inverse hammer. I have a stop loss above the high of this inverse hammer and take profit just above this support zone. So That's it. So guys, again, it was a privilege and honor to host this webinar for you. I hope you find a lot of value. Please make sure you like and subscribe on the YouTube channel. If you find this content valuable, you can leave us some comments if you would like. For me, from Admirals, would like to say a very big thank you for your support, and I look forward to see you again tomorrow at the same time. Thank you so much and happy trading.